60 odd points, but a sharp downtick from the top that we are seeing for this one.
Well, that was the day so far. Hello and welcome to a fresh new edition of Closing Bell. I'm Prashant. With me, my colleague Nigel. Nigel, hi. I mean, the market is not holding on to gains, and that's been true from the morning. It looked like it was actually a flourish of an opening, straight up 150, 160 odd points. But then the drop-off also came almost immediately, and since then it's neither been here nor there. About a third higher, 0.5% up, but never quite back to the day's highest point. So maybe in the middle, maybe a little lower than being in the middle of the range is what we have. Comfortable 2:1 advanced decline ratio. That has not faltered since the word go. A lot of the old economy sectors are doing well. So you look at metals as a space, and maybe we shed more light a little later. PSU banks are doing well. Energy as a pack is doing well as well. I mean, these are pockets which are doing the best amongst the broader market. Later, there is, of course, the Fed Chair Powell's speech at Jackson Hole, and there is outsized importance being given to it. It's possible it turns out to be a damn squib. I mean, the man says more of what he said so many times over so many past occasions, and the market just moves on. It's completely expected. But I think the market reaction and the anticipation is also expected. It's ironical, but that is what it is. We're going into a weekend as well. In any case, I mean, even if it was not a weekend, you're basically running up into the Fed speech, which is going to happen after markets shut. So you're going to be reacting one way or the other when you come back on Monday morning, the next trading session. Nigel, hi.
Well, hi, Prashant. We've been in a bit of a range, 100, 120 point odd range. So the dips are getting bought into. At high levels, we're getting some supply, So today, the day's low at around 17,560 approximately. The day's high is at around 17,690 or thereabouts. There are a couple of strikes as well that are fairly active today. So the 17,700 call, well, big open interest built up out there. More than 33 lakh shares have got added out there. The premium out there around, that 92 odd rupees. And that's not really moved too much in spite of the markets being up close to around 70, 80 points or thereabouts. So that's telling you there is writing at that level. 17,700, 17,800, that'll be a resistance. On the downside, though, encouraging to see a good amount of open interest built up there as well. Close to 25, 26 lakh shares getting added at around that 17,500 odd mark. Premium at the start of today was around 150 points. So you just plug in that number, that's giving you a stop loss of around 17,350. And that's the level we went to earlier this week. From there, we saw a bit of a bounce. So the broad range would be on the downside, 17,350, 17,400. You'll have to, try to take a bit of a punt, take a long trade out there. On the upside, till we get past that 17,700, 17,800 odd mark, yesterday it appeared we're going to get there. Till we get past that, then in fact the bears will feel that they're still pretty much in the game. But let's get in Rahul Mohinder, who's joining in, I think so. All right, I think let's run you through first what we have on the show, and then we'll get a quick technical check on the markets. First up, sources say that Zuari Agro is in talks to offload their stake in Mangrove Chemicals to Chambal Fertilizers. Details on that exclusive story coming up in just a bit. Strong D-Street debut for Sirma SGS Tech. Excerpts from the chat we had with the management earlier today. And finally, we'll track the market moves, the way forward with Dharmesh Mehta of DAM Capital, as well as Dinshaw Irani of Helios Capital later on in the show. But how do you trade this final hour? Remember, as Prashant said, we have that big event. The Fed chief is going to be speaking, Mr. Powell will be speaking, and we'll react to that speech on Monday. And in this month itself, that's in this series, in the month of September, you'll get a rate hike. The street is bracing for 50 to around 75 basis points out. Rahul Mohinder joins us to give us his trade. Hi, Rahul. We're just talking about the markets being in a bit of a range. What's your strategy from here on? I mean, how would you approach the markets, and what are the levels you're looking at?
Good afternoon. I think absolutely you nailed it. We are in that range, and the market has to accept that we've had a fairly straight line move almost, that whole month of July. And even the drop that we saw in the first week of August or so, that too was fairly straight line. I think the market calls for a pause, and that's what we're seeing. So I would really say that 17,200 to 17,800 is my broad-based range if I try to look at the bigger picture, not worrying about the short-term movements of the market. I think that's the range we're probably likely to be within over the next couple of sessions. So this may take a week, it may take 2 weeks. I think time will tell when we break out of these levels. can we get a convincing move? And I tried to look for leads. I tried to look into the index heavyweights, and I think it's a mixed picture. There's banking that looks, fairly solid still. There's technology that's pulling the index down, which looks a bit weak still. So I think there's a balancing act going on, and probably which is why you'll see the range-bound action. Coming to what we are seeing today, pretty much like we opened very strong the previous session or two also, we finally trickled off on the downside and closed lower. So, one has to see that the market's not able to sustain, these high openings. It's not able to, get a fresh bout of buying and a fresh breakout to go through it. So I think let's not jump to conclusions that a gap up means that we've necessarily broken out on the opening. And I think we've seen that not just once today, we saw that in the prior session too. So I think my sense is from an index standpoint, one should set one's levels at 17,200 to 17,800, try and work through that range. If I was a bank Nifty trader, the 39,650 level, that's the key resistance. And I must admit that the Nifty Bank does look a tad bit better than the Nifty 50 index itself. So my eyes would be more tilted from an index perspective, from a positive side on the Nifty Bank.
Okay, important points and well explained, Rahul. Thank you very much. All right, I think you have some picks as well. Sorry, go on.
Absolutely. I'll keep that theme alive with SBI. I'm going to start with a buy on that stock. Keep a stop loss below 520. We should be moving to about 538 to 540 in the next session or two, in my opinion. On the sell side, Tata Motors looks weak to me. Keep a stop loss at 473. I'd be looking at 454 as a target. And the stock that's, of course, breaking out in a big way is Reliance Infra over the last couple of sessions. I think it's still good to go more. So 180 target on that one, 152 stop loss is what I'd use. And if you're just looking at a very short-term intraday trade, I think HDFC Limited could have a bit of a slip even today or over the next session. 2380 would be my target on it. 2420 a stop loss.
Okay, all right. Rahul, thank you very much for that. Appreciate you joining in with that perspective. Devin Chokshi is also now joining us. Devin, good to have you with us here. As always, as Rahul pointed out, you got a situation where it's not conclusive one way or the other, right? Rallies are being sold, dips are being bought, but without any substantive break on either side. Maybe it'll remain like that, right? Markets can do that for a while. It doesn't necessarily have to run away in either direction. How likely is that near term, in your opinion?
Yeah, Prashant, good afternoon. Well, I think the current rally in the market, as I typically see, is I think a bounce back to the fall that it has had in the earlier quarter, in which I think largely the sell-off took place because of the collateral losses, collateral damages. I think that they had to pay for, particularly the FIs. I think when they incurred losses in other asset classes. So I think that was the reason for sell-off, and I think from that perspective, I think market was justified in that sell-off. Today, I think the recovery in the market is on 2-3 counts. And from one side, the new funds have started coming into the market from global investors. Once again, I think they're buying at a lower levels, largely because of the better prospects in the economy as well as in the growth of the corporate sector. Second most important aspect, I think, as we believe that I think inflation management comparatively in India is better as compared to other parts of the world. That gives higher amount of confidence to majority of the global players to, I think, bring money into the market. And India has a structural story from investment point of view, both in infrastructure as well as in the industry. I think it's attracting a lot of new investment. So all in all put together, this recovery in the market has taken place. Now for the market to break out, I think from current levels, certainly would require a couple of quarters of sustained and higher growth performance as far as earnings are concerned. Last quarter earnings have been relatively stable and better. I think this particular quarter, you might see some influence of fluctuating commodity prices into the earnings. And I think there may be some situation where I think some of the sectors may not probably, I think, give enough amount of earnings in this particular quarter. Having said that, I think the second half of the financial year looks relatively more promising. So if the market is to do the breakout, then possibly I think it would be on a positive news of inflation under control, interest rate not rising, and higher food production coming out, which could possibly suggest that the better opportunity is there in the second half of the year. So I think these are some of the reasons which one will have to wait till the breakout takes place as far as the upside is concerned.
Okay, all right. Well, by the way, the markets are trying to conquer that 17,600 odd mark, but from the top, we saw some bit of selling. A couple of stocks have taken a bit of a leg down. Britannia has moved lower, so keep an eye out on that one. The bigger boy, Infosys, as well as Reliance Industries, with the intraday chart should come up of both those two. Remember, they're larger weights. When they take a leg down, then that puts some bit of pressure as well. Infosys days low, even Reliance Industries at the day's low as we speak. But let's focus on a couple of other names then. Mangalore Chemicals is in focus as sources tell us that Zuari Agro is in talks to sell its stake in the company to Chambal Fertilizers. Nisha joins us to fill us in with more on that. Nisha?
Thanks for that. Yes, when we earlier broke the story, Zuari Agro as well as Chambal Fertilizer stocks had seen a spike on the back of this particular news break. Now, what we are gathering from sources with direct knowledge is that there's a massive reorganization in the Advent's group, which owns all three companies, that is Zuari Agro, Mangalore Chemical, as well as Chambal Fertilizers. Way back in 2015, Zuari Agro had bought Mangalore Chemicals, in which it owns 54% stake, and now we gather from sources with direct knowledge that Zuari Agro is looking to offload its stake and the entire holding in Mangalore Chemicals to Chambal Fertilizers. Now remember, this is even though a group reorganization, because it's the same group promoter entity, Saroj Poddar-led group, but on the other hand, all three are separately listed entities, and the transaction will have to be done on the basis at arm's length as separately listed entities. Another aspect that I gathered from sources with direct knowledge is that Zuari Agro is taking this step after buying Mangalore Chemicals in a hotly contested battle back then, is because it wants to raise funds in order to pay back its debt. So these are the details really coming out. We do gather that an investment bank has also been hired in order to really carry on this particular restructuring process. And when we look at the overall group, then 60 to 65% stake is held by the Advent's group in each of the three companies that are operating in similar space. And on the other hand, Zuari Industries also has cross-holding in these particular companies as well. But Chambal Fertilizers as well as Zuari Agro, these are the two transacting parties for Mangalore Chemical shares, is what we gather from sources.
Okay, all right, Nisha, thanks a lot for joining in and filling us in with those details. Stocks clearly spiked up once Nisha, broke that story. Devin, coming across to you, what's your view on this developing story and how would you approach these stocks?
So, Nigel, I think since we don't have the coverage on the companies, I would refrain from making the viewpoint on the company. But as an overall story, I think in the fertilizer space, currently, due to many of the plants, I think particularly those who are producing the ammonia, I think are going to be in favor largely because of, I think, the supplies to European market due to the stoppage of production over there under the circumstances of crude oil shortage, etc. So I think that is one of the reasons for which I think most of the fertilizer companies which are having the ammonia production are likely to see the benefit in the coming quarters. And that is where probably I think one could argue that I think as a commodity, one would possibly see relatively better results in 1 or 2 quarters hereafter. But that's it. That is what I think one could basically look at, I think, as a near-term outlook for these companies. Beyond that, I think the regular business of the companies, since we are not tracking them, I would not be able to make a comment on it.
Okay, got that. Do you any thoughts on what's happening with names like Mazgaon Dock? Devin, do you track this one? It's up 13-14%.
Not really, I think, not looking into this particular space.
Okay. The other space is fertilizers, which are jumping up a little bit. Chambal, for example, is up about 6%. Coromandel has been doing fairly. It sold off yesterday. It's back up today. RCF and a few others. We had the Fertilizer Association, head of the Fertilizer Association of India with us earlier today. On this, of course, this government rule on one India, one branding for fertilizers. But more importantly, we also quizzed him about, the shortage of gas and, of course, shortage of things like ammonia because of plants in Europe, etc., shutting down. I mean, his point was that at the end of the day, it's up to the government. I mean, they'll have to up the subsidy that they offer to farmers so that companies can raise prices to compensate for these increased costs. Any thoughts at all, Devin, on this space?
So as a sector, I think, Prashant, since I think the fertilizer is a state subject, largely I think the government policy influences, I think, the business of these companies. And I think as we have maintained all along, I think any business in which I think the government has a very direct intervention, I think stay away from taking them into the investment portfolio. And that's what we do with most of the fertilizer companies. I think we don't find enough amount of excitement because over there with the strike of a pen, I think they change the entire fortune of the company, I think at times. So I think that is where probably I think one would not like to, I think, add this kind of stocks into the portfolio.
Okay, all right, got that, Devin. By the way, let's take a quick check on a couple of stocks actually which are doing well. Shree Cement has moved to the high point of the day as we speak. That's up close to around 2%. Grasim as well is bouncing back. That's up close to around 3.2%. And JSW Steel as well now up close to around 3%. So keep an eye out on a few of these names. For the time being though, we'll slip into a short break. On the other side, we'll track market moves and the way forward as well. Dharmesh Mehta of DAM Capital will be joining in. Well, the new kid on the block, Syrma SGS Tech shares, they made a strong debut on the last trade, listed at around 260 rupees or in comparison to issue price of around 220 rupees. That was a premium of around 20%. But the stock has just run on even after that. Now it's up nearly around 35 to around 40%. Earlier today, we caught up with the executive chairman of the company, Mr. Sandeep Tandon, to understand what do they plan to do with the proceeds, what is the total capacity that the company has, and at optimal levels, what kind of revenues can they do? Let's hear out what he had to tell us.
About 500 crores of that proceeds are going for plant expansion. This is between greenfield and brownfield. We've already added one more plant in Manesar just recently this quarter that has just started, and one R&D center in Chennai. So expansion of R&D and greenfield and brownfield facilities that will be deployed over the next 18 to 24 months from the projections that we are seeing from our customers. Typically on the equipment assets that we put, we get about 5 times growth, but it does take time to build that out. So about 2,000 crores from this when it's fully deployed. Yeah. We want to stick to the same margin profile that we had last year. That's our aspiration. And growth we want to hit. We are aiming for industry is growing at 40%. We should try to match industry growth for this year.
Okay, all right, Devin. Any view on this one? I think few factors that played out for them was they had priced this issue rather attractively. They have a larger peer which is already listed, trading at very, very peak valuations. They're talking about good revenue potential from here on, and investors, they like the fact when money that is raised goes back to the company rather than to the promoter entity. At least that's a bit of a psyche that plays out. How do you view the stock? It's already up close to around 35-40%.
Yes, I think from the issue price to now, I think the valuations has possibly caught up. I think from issue price, I think the valuation was relatively lower compared to Dixon. I think, and today you are basically seeing, I think, a larger amount of catch-up is happening on the valuation side, with around 35-40% rise already in the stock. So, I think these companies are traded expensive electronic manufacturing services, along with, I think, larger focus in the area of automobile, also in the area of infrastructure-led growth, I think, which is coming from machinery segment. I guess, I think, in power segment as well. I think so where probably I think their products are going, I think the growth assumed, I think, in the customer segment is very, very high. As a result of which, I think these companies are commanding significantly higher amount of premium. As long as the growth engine continues, in my viewpoint, I think they will continue to command relatively higher valued premium valuation. But if the growth tapers off or moderates, then possibly I think there is a risk involved in it. As of now, the journey continues with the higher amount of growth in the current year and next. So probably I think one will stay invested into it. I think even though it is quoting at a reasonably high premium valuation at this point of time.
Okay, all right, David, thank you very much. Good speaking with you, as always, here on CNBC-TV18. Always a pleasure. Actually, we have one of the top bankers in the country joining us now, who also, I think, facilitated the Sirma IPO that we were just discussing. Dharmesh Mehta is Managing Director and CEO of DAM Capital. Dharmesh, great to have you with us here. Thank you very much. Congratulations. I mean, 30-40% pops on listing day. It gets you in the up and up kind of mood the market was in many months ago. But what did you sort of make of the company and the prospects? It's, looking pretty good.
Hi, Prashant. Hi, Nigel. Yes, it's a good day for the Indian capital markets, especially for the IPO markets. And after almost 2.5, 3 months, the company is getting listed with a very decent listing kind of a pricing where every investor has made money. And as Nigel rightly mentioned, it was priced very attractively, and the sector has got very strong tailwinds. That was one of the key reasons why you've seen this kind of listing gains. And hopefully, with the kind of growth story which is in there, as mentioned by the management on the roadshows, if they are able to deliver on what they promised, there's a good upside on this stock.
Hi Dharmesh, good to speak to you after a long while. A good issue. Congratulations, you guys helped out as well. What's in the pipeline though? What should investors look forward to? The IPO pipeline, this one saw a massive subscription. And investors have been rewarded, as you said. But what's in the pipeline? Are there a couple of banking names that are likely to come out? I'm just asking you that because the street is speculating what's happening with these banking names. Could be some consolidation, could be valuations, or could be some new kid on the block coming about. So you say, why don't you go to the ones that are already listed?
Nigel, almost 125 companies that filed for IPO. So almost every sector is covered in that. I wouldn't just short point to a banking name or something else. I believe a lot of companies require capital for the growth story, kind of the phase India is right now. So out of 125 names, I'm very sure many of them will go through, maybe almost 20-30% of them. But the other ones won't be that easy as the market is still in a volatile mode. So we just don't know what happens in the very next week or a month from now when they need to launch, especially because of the global environment. But yes, there are very, very interesting names. There are tech companies, there are financial companies, there are consumer companies, and there is also a few more EMS companies coming to public. So there is a variety of deals coming through, and one has to see how many of them go through. And the companies which have a decent valuation is priced very attractively like this one, I'm very sure there is enough demand for that. Because there is enough liquidity in the system today. I don't believe there is a problem of capital, it's the problem of confidence. So wherever people see the valuation and the business story to be strong, there is enough money to come in for those kind of
Dharmesh, the other area where there has been a lot of activity is blocks, right? A lot of blocks have happened and they continue to happen. The last, I think, meaningful one was Devyani. But, we counted, I put out a piece, some $4 billion from over the last month or so plus. But that includes, that Yes Bank pref issue as well. But even then, without that also, the number is large. What do you make of it? What do you make of all of the activity? And what kind of people are buying? Those who are selling have been invested a long time and they want to get out. But incrementally, I guess we get more signal from who's coming in. What did you make of that?
See, basically, blocks are very easy to cross because you can act immediately. Unlike an IPO or another QIPs, which take almost a month or 2 months to even launch the deal. So clearly, the action is immediate, and especially in this environment, people don't want to take a long-term volatility risk. So if the decision is there today, they are all with cash. As you know, mutual funds are sitting on all-time high cash, and there is enough liquidity in the system. And I always believe that supply brings demand rather than demand bringing supply. So as soon as they see these large blocks available, the institutional investor can actually act fast and close the deal because they are certain of what's going to be coming in next few days rather than after a few months. So because of certainty factor and stocks being attractive and they've been available at a discount to the current price, that attracts a lot of investors to act very fast. And the execution is immediate rather than after a few months.
Does the book...
It just shows you the kind of confidence people have on in the India story. And if it's a good company at a good price, there's enough people to buy those blocks.
And the other thing is, the larger the transactions, the faster they seem to happen.
That's true. As I said, supply brings demand.
That
so
max block,
supply,
right? That max block, 10% straight away, somebody buying. And the kind of names who are coming in, strong, long-only names, right? Lots of them.
See, because all of these were not invested in India since a long time. FIs had exited India, as you know. They were actually in a huge selling spree in the last 18 months, one of the longest period at least I've seen in my career. And especially because there was a risk of trade, the money was going back to US, to the dollar. So they were basically on the selling spree, especially the ETFs. But things have changed now. I think so the global volatility in that sense is much lesser. India is a big beneficiary of what's happening right now in the global environment because oil prices have come down, inflation is coming down. So India is in a very sweet spot. So all the people who have sold out in the last 18 months, they are looking to invest in India because that looks the hottest market to come into, though it's not cheap. On valuation-wise, we must be the most expensive market in the emerging markets. But because of the growth story and the kind of condition which India is in today, and if your inflation is under control, the rates are under control, commodity prices have come down. If that is not shaken, I think so there is huge amount of money coming to India. And also don't forget there is humongous FDI money which is coming.
Yeah,
the last 12 months benefited from the FDI flow instead of the FI outflow.
Yeah, that's right. Dharmesh, one thought was that the FIs, well, they were selling all markets. Now they're buying, most of the emerging markets. So India is part of that. But the sense you're getting is, reading a couple of articles that India is getting a larger chunk in spite of being at a premium multiple. That clearly goes to show that, they are eyeing more growth. The economic recovery as well over here has been rock solid. So maybe, in fact, just fingers crossed, we stand out among the emerging market and our peers as well. But how are you reading the flows picture, particularly from the FIs? The worst of their selling behind us?
Nigel, if you see the Indian corporate balance sheet today is in one of the best shape I've seen in the last 30 years. Despite in such a huge crisis of, COVID, and then you have this whole oil price hike, the war happening, impacting commodities in a big way. Despite that, the Indian balance sheets are in one of the best possible shape. So though we are at a premium, there's a reason for that premium. That's why the FIs are coming to India. But I would say still a lot of money is yet to come. I don't believe that the entire flow of funds which we saw in 2021, 22, that especially before the selling started, that's not yet coming, especially the ETF flows. So in that sense, it's more FDI money which is coming rather than the FI money. And even now, though the FI money has started flowing, it is still not a very large number. And just wait and watch what happens in case the war ends or this whole global event is, some kind of solution comes to it. In fact, there might be a panic buying in India because the domestics are sitting on cash and the foreigners will come to this country. So I don't think so the picture is over yet. And I think so India is in a very good position if some kind of global solution comes to the kind of global situation which we are in today.
Picture abhi baki hai. Dharmesh, the other thing, all this talk about foreign money, the Financial Times is reporting that there is, so JP Morgan is, the JP Morgan bond index, they are asking large investors about getting Indian government bonds into one of the largest bond indices that they run. This is increased chatter. Goldman Sachs put out a note, I remember the week before last. I remember somebody else also. So things seem to be moving now, right? Because Russia is out. So, there is space, there is room, and there is now, of course, eligibility as well.
Yeah, see, eventually India has to be in the global bond markets. Such a large country with such a large economy can't be out of this kind of a market completely. So someday or the other it is going to happen. But as I said, India is a hot destination. In fact, it's a safe haven also rather than being only hot. So clearly a lot of foreign flow, equity and debt will come into India. It's just let the things settle down. But, I should also warn the viewers that the global event is not out of the way. So it can go the other way, and also especially when the winter comes and the gas prices will go, they already started shooting up. So there is still going to be a lot of events coming through, and that can be positive or negative. So I wouldn't get carried away with the current kind of bullishness. I would wait and watch to see what happens, especially on the oil prices and gas prices. Plus, you've seen a lot of fall in the commodity prices, especially in the chemical space in China, which is also going to impact the chemical companies in India. So I would say we are not out of the volatile situation. I would take one step at a time right now.
Would you take a step back though, Dharmesh? So we are at 17,500. Put on your market hat and tell us what you think. Next couple of months, what's your best sense?
See, I would say right now in this kind of environment, I'll pay stock specific. No use taking a larger macro call on India or on the market, which nobody knows what's going to happen. When you have such a situation which is not under our control. I rather go down to basics, do bottoms-up research, we'll look at good companies, good management, and buy those businesses. And if there is some global event which the prices fall, either you have space to buy more, but at least you won't have sleepless nights if you bought the good companies. This is not the time to be a cowboy. This is a time to be play safe and cautious also along with that.
You know, Dharmesh, you mentioned a few things, about India standing out. We're more bullish on India in comparison to its peers, though you're cautioning us as well. So I have to ask you about the most bullish person or the most bullish voice on India, the great Mr. Rakesh Jhunjhunwala, and you had a close association with him as well, all the way from your days at Inam, I think. So you would have known him for a couple of decades as well. We've spoken enough about markets, but I would like your comment, key lessons that you would have learned from him. Just go ahead and tell us a couple of aspects that you could relate. Go ahead.
I think it's a big loss personally and to the market. So definitely India will definitely miss such a big bull of the market, as we call him. The one lesson we always learn from him, that be always bullish on India. And India is the place where you have to be. Whenever I met him personally or socially, there was never ever any negative comment on India, and he's always been super bullish. And one lesson big which I've learned from him is always stick to your conviction. Don't get carried away by what market environment changes, what people talk. If you're convinced, stick to it for the long run, and eventually you'll go right. So whatever he's taught us in last 2-3 decades will always stay with us. And we're fortunate enough to know him so closely, and unlike others. And those lessons will always be there for us. But the biggest lesson, as I said, is trust your instincts and be always bullish on India.
No, absolutely. Dharmesh, you mentioned being stock specific in a market like this. I don't know if you could name names or talk about certain businesses, but what kind of businesses? I mean, some flavor, some color would help.
Unfortunately, I wouldn't be able to say names, but I think there's a theme. Make in India thing is going to be big. The manufacturing sector is going to be huge in India in the next coming 5 years. So anybody closely related to manufacturing, Make in India kind of a scheme, those kind of themes are actually going to do very well. Financials looks very good to me because the growth is coming back. People will require growth capital, so the bank should do well. So as a theme, I would be paying things where India is the consumer rather than exporter. Because of the global environment, exports can be a little bit in trouble for some time if the things don't get resolved. But the India story is very strong. So I would rather play something which is a make in India and supplying to the Indian consumer.
Manufacturing, but what, Dharmesh? I mean, which sub-segments?
I'll be across the board. I think so the kind of growth we are going to witness, you will require multiple times of the manufacturing capacities which are there in India today. Okay. So I would be looking at, obviously, as I said, it's stock specific and valuation wise, but clearly opportunity is going to be there.
All right, fair enough. Dharmesh, it's always a pleasure. Thank you very much for joining us, and congratulations once again for that IPO. May we see more of these blockbuster ones. Lifts the spirit all around. Thanks indeed, Dharmesh, with that perspective. Well, the market is, market's now blinking red while we were in conversation with Dharmesh. I think what's happened is US indices have also come off. Yields went up a little bit. At least that was, I kind of noticed. So the market's completely given up gains, and we are now in the red. So this is almost a repeat of what we saw yesterday, although yesterday was much more sharp and violent in that sense. But here also, if I just see, there's a huge candle. I mean, the market collapsed at 301. I mean, this is basically the last 2 minutes we're talking about. There you can see it. We were at 17,594. 17,594, and we are at 17,520, just like that. So it's a big drop that we've seen in just two candles, 2 10-minute sort of candles. We've seen this. Interesting. As I said, while it's entirely possible that this speech later tonight is a damn squib, right? I mean, the market just moves on. It's also true that it is happening, and the market does kind of pay its due regard going into an event like that, because it's so happened that it's turned out the other way as well. You never know. So we'll see. Will we, for example, in the morning we were having a discussion with, I think we had Taimur Beg and with Ed Yardini, and Ed was saying that it's possible that, amongst central bankers, the most important thing is to show credibility. So will we get a, whatever it takes kind of moment, the one that we saw from Mario Draghi, the ECB many years ago, this time, of course, to control inflation, not generate inflation, it's possible. So as I said, no one knows. And if you're trading, you want to be mindful of these things near term. 5 points now on the Nifty. So 17,527 is where we are. We'll take a quick break here. We'll come back. We'll get you a check in the dealing room. Nimesh joins in for that D-Street chatter.
Well, the markets saw, a sharp downtick. We went into the red. The Nifty Bank took a harder knock, but now we're back in the green. So we're holding it around the 17,550. Clearly a bit nervous ahead of Fed Chair Powell's speech over this weekend. But good time then to get a quick check into dealing rooms on our special segment, D-Street Chatter. Nimesh joins us to tell us what's going on there. Nimesh.
Hi Nigel, a bit of selling pressure in the last 15-20 minutes of trade. Not really, no specific reasons for that. But I guess at higher levels there is a bit of struggle now, and clearly 17,600 is acting as a bit of a consolidation zone for the Nifty in today's trade. So that's something. In terms of flows, again it's a mixed of trade, though it's a positive bias. But the big theme seems to be the broader markets. There is a lot of traction in the broader markets and mid cap and small cap. A lot of cash stocks are doing good in trade today, largely on increased interest from retail and HN investors. In fact, across the board, sectors like textile, defense, PSU banks, all are buzzing in trade, and there is increased activity from the retail HN investors, is what I understand. Of course, yes, the big macro event is something to watch out, which India will react on Monday, which is the Jackson Hole meet. And that's what is nerving up to some extent the investors in today's trade. I guess apart from that, the other two big liquidity event to watch in the September series will be one on the 30th of August. There will be a MSCI rebal for Piramal Enterprises, and mid of September you will see the FTSE rebalancing inflows coming in. So those are the liquidity events to track. But I guess at a higher level, around 17,600, there is a bit of consolidation happening with a lot of interest in the broader markets.
Okay, all right. So that's, the broader sense. Nimesh, in terms of specific stocks, what are you picking up?
So in terms of individual names, the first stock is Tech Mahindra. That stock is buzzing off late. In fact, for the second day running, that stock has relatively outperformed the IT index, so to speak, and there is buying interest back in this particular stock. Apart from that, I believe that there is a bit increased chatter now that maybe you'll see more, prudent capital allocation policy from Tech Mahindra going forward, and hence a bit of interest back in this particular stock. So that's the first one. The second stock is Escorts. From nowhere, that stock is buzzing in trade, up 3-odd%, largely on back of on good volumes from a larger FII. It's a thinly traded stock, so to speak, so the delivery volumes are going to be quite high, and that's impacting the stock because there is a bit of buying interest back at a leading FII desk in Escorts. So the second one. And the last stock is ICICI Lombard. Again, there is this renewed chatter of a large block deal coming soon. I was looking at the shareholding pattern. Bharti Enterprises owns a 3.7% stake, and there is a speculation that maybe that entity will sell out. Also because of the fact that the Bharti promoters need to fund the Singtel buyout. So maybe some bit of deleveraging will happen at that level to fund the Bharti stake sale. So that's the speculation why there is a anticipation of a large block in ICICI Lombard maybe early next week.
Okay, all right, Nimesh, thanks a lot for that. Well, keep an eye out on the markets from the Nifty pack itself. Let's see, who's fighting for the bulls at least, in the last few minutes. Adani Ports, not a very large weight, but that's doing pretty well. So that's showing some fight. NTPC, the anti-ESG theme, unlocking of value with regard to the renewable portfolio. That seems to be playing out because that stock has done pretty well in the last few months or so. Well, Rahul Mondra joins us to tell us, give us his buy or sell recommendations for a reverse trade on Monday. Hi, Rahul. You're back. Tell us, what do you have for us?
So I think in the area that we're in, it's going to be a bit of a mixed bag. But on the buy side, safer spots, stock like GAIL, anywhere around the current levels, especially between 132 and 134, in my opinion, sweet spot to buy. Keep a stop loss at 130. We should be poised for levels to about 141, 142. So that would be a buy for me. Jindal Steel too could have a bit of a run up. But I'll probably pick M&M Finance. That's the latest one that comes up on the radar for me. 198 stop loss, 221 near-term target. But again, if you can stretch out time on this one, I find this stock to be pretty solid, even from a medium-term standpoint. So M&M Financial can move to even 250 levels. So a clean buy for me with a 198 stop.
Okay, all right, Rahul, thank you very much. Thanks for those ideas. 30 points. I mean, so the market's not staying down, or it's not sort of going after correcting. It's not going deep in the red or anything. It's bounced back. But one thing is clear, there is a little bit of hesitation at high levels. By the way, futures premium is still 100 points. I mean, 101 points. That's something. 17,650 on futures. Dinshaw Irani is with us, Chief Investment Officer at Helios Capital India. Dinshaw, great to have you with us here on the program. Thank you very much. I mean, that futures premium is optimism about the market, right? Very simply put.
Prashant.
Yeah, sorry.
Prashant, anyway, thank you for having me on your show. And obviously it was that way. So basically our call was fairly clear. I mean, we in fact were first ones to take a cash call and probably started investing at the right time again and sometime in June onwards. But the fact was that this recent run in 2 months of roughly around 17-18%, that needs to be digested. I mean, that is the clear call that we've taken, and we always felt that this run should be digested by way of either a time correction or maybe it's an oscillation between a plus minus 5% kind of a band, and that's what's playing out, Prashant. So we're not totally surprised here. This is about the immediate short term, but on the longer term basis, I think India is one story that cannot be ignored, given the kind of consumption play that India is getting into. I mean, as in the millennials and the Generation Z that is going to rule in the consumption space for India. And obviously the fact that we always have been established on the services export front, but are also looking at a manufacturing base now for the world as such. So this is one thing that cannot be ignored. And that's why we believe that probably for the next couple of months, maybe we'll be digesting this move. But beyond that, I think global events on the side, we are totally well placed to play this out.
Okay, well placed. India is in control, it seems. Dinshaw, good speaking to you today before we get into the weekend. Dinshaw, the last time you joined in, close to a month or so ago, you said a couple of banks were what you all had got into, and you all had picked up more of IndusInd Bank. That's a good call because I think it worked out pretty well for you all. There was some negative news flow. The stock crashed to around 800 odd. You all topped up out there, so pretty good news. Now, in this week itself, some of these tier 2 banks have come back onto the list. And, some of them are trading at a sharp discount, 0.6, 0.7 times price to book. I think IndusInd Bank itself is trading at around 1.5, 1.6 odd. I remember the market giving it a much higher multiple a few years ago. Have you all participated in these other tier 2 banks, RBL Bank, IDFC First Bank? Some of those names that are absolutely ignored, suddenly they saw buying interest?
So, Najil, in fact, we've, you took those names. I will not comment on those names per se because we keep considering various banks in our portfolio. But, there's a limit to which we can buy banks. We already have some 6-7 of them in our portfolio. And frankly, we've been trying to get some cash raised because there are quite a few exciting names there actually. But the point is because it's a PMS, right? So you can't, to buy some, you have to sell some, right? So we're at a loss to get those ideas, even to sell today, to get into these names. So you're right in a way. I think the private banking sector itself is going to be a growth story going forward. In fact, the whole BFSI space for us is looking very good. And frankly, as I said earlier, consumption is what is going to drive our economy as such, making us probably one of the fastest growing economies in the world in the next couple of years, for the next couple of years. And that is mainly because of consumption. And obviously the funding of consumption is going to come through either private sector banks or NBFCs, and insurance is going to play a big part here again. So that's why these are the few that we've been looking at, and we've been playing this out thoroughly. In fact, today we are probably a couple of percentage points overweight in the BFSI space as compared to that of the benchmark for us.
Dinshaw, you said you had 5-6 banks or thereabouts, and a couple of them at least you were kind enough to share with us. Last time were Axis Bank as well as IndusInd Bank. Between this banking exposure that you have, How many of them are those, large cap banks, the tier 1, and how many of them are tier 2? So we get a sense out there, about how you're positioned on the banking space.
So the number of banks that we have, probably a third are the not so large,
okay,
and 2/3 are the large cap ones.
Got it.
In terms of numbers.
Yeah.
These, so these smaller banks have enticed you, Dinshaw, at all, or no?
Definitely they have, and that's why I was saying, Prashant, that the problem is that we can't find the cash because we have a limit of 30-35 stocks in our portfolio, and we are already exceeding that limit by one particular number. So that's how we are.
Anything this move that we are seeing in defense names, Mazgaon Dock, for example, some 13% higher. How would you venture out away from what you already own? I mean, of course, you may do that when you get more cash. Would you sell anything to buy anything new at this point?
Prashant, so we already are proud owners of one of the defense names, which is obviously a public sector company, and that also has done fairly well for us. It's one of the largest ones, but you won't find us getting into these other names which are more of, there's a liquidity issue, you can't get your volume, so you won't find us there. But we take our bets accordingly. It's not that we don't have, we obviously, if we are really excited about an idea, we make way for the cash, and that comes via, weighing one stock against the other and saying, will this do better than the other one? And that's how we do go about raising cash. But in the AIF, we don't have any of that kind of a constraint. We can always just reduce weights across and do it. So that's how we go about it.
Okay, all right. What about the chemical space? There are some capacities that are getting shut down globally, but also demand is getting pushed back a little bit. How you view this space? Do you still believe there is plenty of potential? In the past, you mentioned that SRF is a stock that will continue to remain invested in. But are there more opportunities coming up out there, or do you believe now the industry on the whole is getting to a bit of a flux because of the uncertainty?
So, Nigel, we were never too excited about the space. We, in fact, had just one stock from day one. In fact, we just had one stock in that space. And frankly, for the life of us, we couldn't understand why the valuation was so high. Ultimately, these are non-ESG players, and the reason why China was moving out was because of ESG concerns. So we weren't too keen on these. The only one that we picked up, which you named, was mainly because it had a one solid business of packaging, which was a cash cow business, and the other one was another business which was less politically based as such. So that's why we liked that particular name, and that's why we remained in that. But not beyond that. We haven't looked at any other, we won't be looking also at any other chemical company right now in the near future.
Okay. All right, Dinshaw, always good hearing your thoughts. Thanks so much for stopping by. Wishing you a good Friday evening and a rocking weekend ahead as well. Look forward to chatting up with you.
Thank you. Wish you the same.
Rather soon. Well, let's address a couple of names then. KRPL, that's a stock in focus. It suddenly saw a sharp downtick. Unconfirmed reports have indicated that India is likely to curb some rice exports, in risk to global supply. Those are some, details that are coming in there. To clarify all of that, actually, we have Mr. Anil Mittal, the CMD of the company, who joins in. Hi, Mr. Mittal. Have you heard anything from the government with regard to any kind of ban of exports? And if you could tell us, as a percentage of your total sales, how much is exports, and could that be under risk? Go ahead.
Yeah, Nigel, there is no news up till now that government is going to ban exports of broken non-basmati rice. But let me tell you, as far as KRBL is concerned, we have a total 5% exposure as far as non-basmati, broken or non-basmati is concerned, as compared to our basmati sales. We are a basmati company and we are into basmati. But we started this broken rice export just 1.5 years back when China opened up. India used to export around 2.5 million tons of broken rice, mainly to West Africa and Senegal, Dakar. They were the main countries. Now, last 18 months, you can say, China came into the picture, and they have started importing about 1.25 million tons. unbalanced quantities are still going, some quantities to Dakar and Senegal. But the main consumption of broken rice is within the country because ethanol broken rice is a very good raw material for manufacturing of ethanol, and government, has already decided that maximum quantity of ethanol should be manufactured in India to mix with the petrol. So there where the main consumption is. Now, since the prices have gone too high in last 6 months of broken rice, government can ban, they have not banned, but anytime they can ban the export of non-basmati broken rice.
Okay, Mr. Mittal, if I got that correct, you're saying that as of now, we have not heard anything from the government, point number one. There's a probability they could ban, but if they do ban, then, the non-basmati broken rice as a percentage of your sales is approximately 5%. Is that correct?
That is absolutely correct.
Okay, all right. And otherwise, most of your exports are basmati, broken rice?
Basmati rice, yeah.
Okay, all right. So as of now, there's no such news with regard to an export ban of non-basmati broken rice. Thanks so much to Mr. Mittal for joining in and giving us that quick clarification. The street was fretting a little bit that there would be a ban. We look forward to chatting up with you in case something of this sort does come about. For the time being, though, we'll slip into a short break. On the other side, we've got a few minutes before we wind down the markets. You stay with us.
Okay, welcome back. There's 5 minutes to go for close. Now some global opinion, because that will take center stage later, Jackson Hole. We caught up with Ed Yardini, president at Yardini Research, and Taimur Beg, managing director and chief economist at DBS Group Research, in terms of their views on the speech from Fed Chair Powell and, of course, the September Fed meeting itself. Listen in.
Whatever it takes really is the theme that Fed officials have been pushing. Even the doves, some of the people who've been very dovish over the past couple of years, they're squawking like hawks. And so they're all saying that they've got to do whatever it takes to bring inflation down, that high inflation is not conducive to economic growth. It's bad for the purchasing power of consumers, especially low-income consumers. So I think the Fed has got really no choice but to talk tough. But I think when they actually act, they're going to be acting cautiously. They're going to respond to the data. I do think they're going to do 75 basis points. I agree with Bullard that if you're going to raise rates, let's get it over with. Let's front load it. And I think the markets want to see it front loaded as well.
My base case expectation from the Fed is for 50 basis points and to give very little clue as to what they're going to do in late September today. So regardless of what the Jackson Hole talks cover, I don't think that'll be a very good marker for what the Fed will do at the end of September, simply because there is just way too much uncertainty, whether it is on the earnings side, because corporate profitability at the end of the day is an important ingredient toward the understanding of how the economy is doing. And there's a push and pull there. You've got a lot of negatives coming from higher cost, and there's still lingering positives from pretty resilient demand. So are we going to have sharp decline in profits, or are we going to have modest decline in profit in line with a tightening monetary condition? So that's one issue. I think we have plenty of data points in the next 3-4 weeks to come that will determine that aspect of the economy.
Okay, just wrapping up things as we wrap up this Friday session. So it's going to be, it's almost as if that last, that move that we saw towards starting 305 or so never happened. I mean, we're back. It did happen, but it also did not happen because prices are back where they fell from at about 305, maybe a little lower than that. 17,572 is where we are at on the index. It was a sharp move, no doubt, but prices are back, as I said. Okay, let's start with large caps as we begin wrapping today's day. As I said, I mean, if you want to look at sectors, energy, PSU banks and metals, old economy, that was where bulk of the action was. Nifty stocks which did well, you had Grasim, which was up about 3.5%. JSW Steel was up 3%. NTPC ended up 3%. Adani Ports with about 2.75% in gain. Titan was up 2.6%. Coal India 2% gain. There was Power Grid which was up 1.6%. Kotak Bank was about nearly 2% higher as well. Actually, plenty of action as far as the top Nifty gainers are concerned. Losses in Eicher Motors, news related, 3%, 4% lower. IndusInd Bank and Bharti were the other two losses, but nothing large, 1.5%, 1.75% kinds. So large caps for you. Nigel.
Well, by the end of it, we ended well in the green, so that's pretty good news. Closer to around the 17,600 odd mark, but brace yourself for a bit of a move on Monday's opening because we'll have clarity with regard to what the Fed is thinking. But a few stocks today, they were in a world of their own. Zuari Agro, post that story by Nisha. That stock, in fact, was up close to around 11%. We had a few other names as well that was buzzing around. Data Patterns, that stock was up. Nelco, more business coming in. The street likes its stock, locked in upper circuit with a gain of close to around 10%. Some of these mid-sized banks continue to rally. Whether it was DCB Bank, you had IDBI Bank, they did very, very well in today's session. So they were up and about. And let's add on a couple of more names. Then you had Aptus Value Housing. Stock was up close to around 6%. A few stocks, though, actually were locked in upper circuit as well. HPL Electric, there was some news that came in the final hour of trade. So that one was up 20%. Surya Roshni as well, the stock we don't track very often, was up close to around 20%. And Vandala as well was, it's been in a world of its own. It's up close to around 11% today. And for the month itself, it's up a whopping 56%. So to wind things down, the Nifty well ended in the green. The Nifty Bank was a relative underperformer. At least by the end of it, you had more stocks that were advancing than declining. Well, on that note, we'll have to wrap up on this edition of Closing Bell. But you don't go anywhere. Our Friday special, Smart Money, comes up next. And today,